doyens, I will say he can be considered as the doyen of self-help. He started the Myrada and the self-affinity groups, as Nandaji would say. Everybody, he has been a guru to everybody in the development sector, especially in the self-finance area. Currently, he is the chairperson and the board of directors of NAFINS, which is a subsidiary of NABARD and functions as a non-deposit taking NBFC. He has vast experience in the fields of development and finance, having worked with Caritas India, the World Bank and the Canadian International Development Agency. He was closely associated with NABARD in promoting the SHG movement, and he has also served as a member on the various national committees on policy as well as implementation. Now, Dr. John Ray, he also doesn't need any introduction, but again, I will go with the process. Dr. John Ray has contributed enormously to India's economic policy making. He has made wide-ranging contributions to development economics and public economics. He studied mathematical economics at the University of Essex in the 1980s and did his PhD in theoretical economics of cost-benefit analysis at the Indian Statistical Institute, New Delhi. Dr. Ray's research interests include issues like hunger, famine, food security, gender inequality, child health and education. He had conceptualized and drafted the first version of NREGA, the much touted scheme which has been, we will discuss that. He was a member of the National Advisory Council of India in both first and second term. Dr. Dreis has 12 books and more than 50 research papers to his credit. He is currently an honorary professor at the Delhi School of Economics. With the introductions done, the time allotted to me has been cut short by around 20 minutes. So we had initially discussed amongst us that the session will go along the following lines, that each of the speakers will be given 15 minutes to speak on a broad area of the policy, followed by one question by the moderator, which will be answered by the panelists in 5 minutes, and then Q&A session. But considering the time which has been cut, I have decided to take my privilege of asking questions out of it and keep the Q&A part, because this being an academic institution and such a distinguished panel, I don't want students to miss the opportunity to ask questions to your heart's content, and till the time permits it, I think our panelists will be grateful to answer that. Now the guest, yes, very comfortable. So starting with, he ended the first session, but he will have to start the second session. Vijay Mahajanji, the area which we had discussed that he will speak on, that we are living in very interesting times of financial inclusion. We are seeing a lot of changes on the institutional front. We are also seeing a lot of changes in technology. And a lot of infrastructure has been built, starting from 69 onwards, which he referred to in his morning speech. The inclusion architecture has become very diverse in India. On the one side, you have banks, you have cooperative banks, you have regional rural banks. Now we are talking about small finance banks and payments banks. Then you have the adjuncts like business correspondents, business facilitator is a concept which did not take place much. On the other side, you have MFIs, you have NBFC MFIs, you have societies, you have trusts, you have mutuals, and so on and so forth. And the experimentation goes on and on. So the topic, the broad area on which I request Vijayji to speak on is, after around 50-60 years of experimentation, are we moving towards any coherent policy framework or vision towards an inclusive India, or we are still at an experimental stage? What are the gaps, and are we really building on the convergences and synergies of the various models, or we are still working on a silo-based approach?
So, as I said, in my morning speech, that the reason I don't have too much company is because I stand in the middle. You find either people who castigate the role of the state for the last 50 years, kuch nahi kiya, etc., or you find people who are like, complete sort of, for them, everything has been done by only one Mai Baap, which is the government. The reality is that, we are an imperfect democracy. We are also still a formative economy. And given all the disadvantages we started with, and comparing it with the international track record, including, I think, the only country with whom we are truly comparable with, which is China, I think we are not badly. You know, yes, the Chinese have a far greater growth rate for a longer period. Yes, anybody who goes to Shanghai today comes back saying, "Arey," etc., etc. But Chinese political evolution is still so far behind India that I shudder to think for humanity what cataclysmic changes will happen when Chinese politics catches up with Chinese economics. It could lead to a global recession, global chaos for decades. I wish them well. I hope it happens more smoothly. Coming back to India, I think in our own sort of argumentative way, in our own chaotic way, we have evolved a consensus, and that consensus is not the term inclusive finance, but inclusive growth. And I'd like to highlight a point that while financial inclusion is a necessary condition for inclusive growth, it is nowhere near a sufficient condition. And therefore, while I applaud every single step for financial inclusion, such as the Aadhaar card, for example, which allows now an e-KYC, or the linking up of all the banks to the core banking system, or the nationwide telecom system, the spread of mobile banking, business correspondent network, all those policies, not only do I support them, I've argued in favor of them, I've done pilots, I've argued in terms of scaling up, so I don't need to repeat that. But what does it add up? Opening a bank account doesn't mean that you have naturally surplus deposit. Yes, temporarily some of that can be made up through things like NREGA, payments, maybe other social security payments for the disadvantaged. Maybe the Food Security Help Act would help in whatever form it is enacted. But eventually, you're a nation with only a moderate growth rate and fiscal deficit which is understated. And therefore, the kind of policies that were followed by the previous government of an open purse in favor of well-meaning social policies of the kind that Jean is a great advocate of. And at the level of policy, I agree with them. But as someone who is to also pay attention to its fiscal implications, I think we need to think about how inclusive those can be. So therefore, the answer has to be growth as well as social security policy in the intent. If it is growth, then what is it that financial inclusion can do to promote growth? And once again, I want to address very briefly the PhD scholars. For a moment, think of the field of infrastructure finance in India 25 years ago. Nobody financed infrastructure except the government. After a lot of effort, a public-private entity was set up called IDFC. Didn't really do very much. Then second attempt was IIFCL, 10 times larger balance sheet. But basically, infrastructure financing has taken off in those sub-sectors and those states where the institutional framework got fixed. So finance is a creature of certainty. It's not return that investors seek. They seek risk-adjusted return. They seek transaction cost-adjusted, risk-adjusted return. So if you have to pay a 20% bribe to get a contract, your return is already diminished and it's upfront. So imagine what it does to your long-term cash flows. If you have to, maybe you get a contract which is 10% more lucrative, but as soon as the elections, the government changes and the next government picks you up. With that kind of institutional uncertainty, nobody will invest. So wherever infrastructure investments have happened, it's because the government tried to provide uncertainty. Of course, we started very badly. You remember the double power project of Enron? It was a guarantee by the government of India of a 16% dollar rate of return, a counter guarantee by the government of Maharashtra. 120 law firms around the world worked on that contract, and it imploded. Because the institutional framework which was to support those contracts didn't exist. So, therefore, what is the relevance of all this for the poor? Relevance is that the poor make their livelihoods not in South Bombay, not in Electronic City, Bangalore. They still make their living, in Chaibasa and East Singhbum and, basically agriculture, wage labor, forestry, NTFP, service sector, informal sector. So what would enable them to enhance incomes there? First, just to take one example, India's agriculture badly needs $40 to $50 billion worth of investment. In the dryland areas, primarily on watershed development. In the irrigated areas, on improving canal irrigation to participatory methods and so on and so forth. And in repopulating the soil with microbes, all of that. That investment, nobody today is willing to make except the state. Because the institutional framework for private investment in agriculture to get a return does not exist. And I can guarantee you that Indian agriculture will keep dropping as a GDP share 1% per annum till we fix the institutional infrastructure. Therefore, to summarize, financial inclusion is 2% of the answer. We've still got 98% of the work to do.
Make it one. I would still try to you to express your views on very fundamental issues, but on the policy front, do you think are we still groping in dark? We are still at the experimental stage, or we are towards the stage where we are evolving a convergence across various models?
Well, we've had this wonderful coincidence that the fellow who chaired the Committee on Financial Sector Reforms is now the governor of the RBI and has survived the change of government. So far. Yeah. So, by the way, since all of us who are members had such fun working in that committee that we still retain an E-group and we monitor very closely how many of our recommendations have been accepted. And so a lot have been accepted even by the earlier government, implemented, and many more now. But, so there is a coherence there, and the new institutional forms that people hear of which they find confusing, such as payment banks, small finance banks, business correspondent model, then suddenly Jan Dhan, they may find it confusing, but there is a broad architecture behind this, which is well thought through. And great thing is that the technology infrastructure in the country is world class and is capable of wiring up to any one of these requirements. So therefore today we have, I think, the right policy architecture, the right implementation machinery. The Department of Financial Services, Government of India, is absolutely, after a long time, I've seen RBI and DFS aligned on this, which is a rarity. So that's something very great. The fact that the PM, made such a major program out of financial inclusion has put it into, if you ask me honestly, it's made it more salient than it deserves. But at least it's put it into the top agenda of everybody. So I think there is coherence. There will be still, in practice, as we implement this nationwide, there will be both some underperformance and some contradictions will emerge. For example, I personally think that the payments bank will go nowhere. And the answer, at least from inclusion point of view, is strengthening the BC model much more, through technology. And the one final policy reform which actually was not there even in the Rajan committee because everybody thought it was too far out. We need to eliminate currency. currency. You know, money and currency is the same in our mind. But currency is a 500-year-old invention. It costs, a 10 rupee note today costs some 1.6 rupees to just print and circulate. And you know, its full life cycle costs some 2 rupees 50 paise. It's a very bad way to give money to anybody. We should go electronic. We should be the world's first nation where money is M-money. You know, and your Aadhaar number is also your electronic wallet, and all transactions are basically happening electronically. Narega money should come into your bank account. You go to your village grocery, accepts your debit card. He in turn deposits his earnings in the bank electronically. Why do we need this really thing called currency?
So, I had one follow-up question, but I will reserve it for the father. And as I move on to you, other than the questions which were for Vijay, you also need to address that whether the financial services industry currently meets the real client need, the poor need. Yeah, sure. That's better.
I have one problem, I can't talk sitting down. Now, thank you for having me here. I'm grateful to a lot of people who are sitting here. First and foremost, I think to the Jesuits. And I can see also here, I think we go back 40 years. He's teaching ethics today. And I think the rector is also here, and others sitting in the back. Of course, I last visited XRRI about 30 years ago, I think, and it's such a transformed institution. Nanda ji sitting here, who is responsible for the circular to get banks to give a bulk loan to self-help groups. Vijay, I think, we also go back some years, and after listening to him this morning, I think I can die peacefully now. He was so enthusiastic, and the good old, his focus on mutuals. And outside we were both saying the self-help group was the first mutual. In fact, we all come from, I come from a Canadian background, Desjardins, and Rabobank was very much with us. In fact, they are now guaranteeing all napkins loans to producer companies. And so happy they are finally sort of being recognized. Also Sriram's focus on trust and the distinction between a one-way transfer of account of DPT and loans which are based on trust. You know, years ago there was a bank manager who was asking for a loan, so he wouldn't give a loan. So finally he told this client, he said, see, I've got artificial eye from Paris. Now, if you can tell me which is the artificial eye, I'll give you the loan. So this man immediately said, left eye, sir. He said, how did you know? He said, that eye has some element of trust in it. The issue is, I think the problem is that what Sriram came out so clearly, the problem is not so much with the bank, the client, as much as it is with several other externalities that come into the whole picture that make it very difficult for this relationship to really fructify. We'll come to that later. However, now that the overall architecture has been so beautifully expressed by Vijay and Sriram and Professor Pradhan was here, I have to go down to the nitty-gritties of a few things. And I'm going to be a bit critical also, because I think that is something that we need to have. The Prime Minister is not here, so I'm reasonably safe. And I'm not in a big bank, so I'm also reasonably safe. What I wanted to, there are a lot of things that have emerged in this architecture that you mentioned, but there are two things that I'd like to focus on. One is there are so many stakeholders in financial inclusion, that is somewhat, as Vijay said a little earlier, he did use the word, it's becoming a bit of financial, confusion. Because there's so many people, so many stakeholders. And one reason is why I would like to really look at why is each stakeholder coming into financial inclusion? How are they coming into financial inclusion? And what is the target? And there's a little bit of confusion in this issue. And what I'm trying to say is, who are the stakeholders? RBI, Government of India, banks and states. While they've all started from different entry points, and I think that's okay, I have no problem. They all have their objectives, they all have their concerns. I'm hoping that they will work together in synergy. Sir, our policies, and I agree with Vijay, he has done a hell of a big job in this. We have some of reasonable, good policies in this country. We have some of the best formulated schemes in this country. You need somebody to get it working. Unfortunately, we have somebody sitting now on the Prime Minister's chair. But you have to go below that to get the various departments working together. And unfortunately, there is today in that sector, there is an exclusion factor working, not an inclusion factor working. Now, for example, if the synergy is not going to be created, and you require the synergy between the various departments to move from opening a target number of accounts, which is to inclusion and growth. Without the synergy, you're not going to achieve that. And you also require it if sustainability is not to be undermined by parallel interventions. And this is so common now in all the states. There are several steps in this process towards building synergy. And the point I want to make clearly is, each step will require one of the interveners to take the lead role, as well as to work together with others. The question is, will this space be provided, or will one intervener always seek to dominate and even to exclude others? The future of financial inclusion or inclusive finance, and the transition from financial inclusion to inclusive finance depends on the answers to these queries. Otherwise, I think we will continue to be in a state of confusion. Why has the RBI promoting financial inclusion? And I think the best is to take a quotation from the RBI. From the perspective of the RBI, greater participation by all the economic agents in the financial system makes monetary policy most effective, and thereby enhances the prospects of non-inflationary growth. It also reduces reliance on the informal sector, which tends to dent the impact of monetary policy decisions. This is the objective of the RBI, and I think, although it is not stated very often, this is precise. And while I agree with Vijay that you have to move away from paper cash to email cash, the problem we have faced in this country is that 90% of business transactions, small-scale industries, is in the informal sector. How do I deal with that? How do I deal with that? So, I've been, it's cash. Until we can get out of that, and this whole, we are going to still be faced with that big problem. We cannot have one without the other. Now, Pradhan Mantri Jan Dhan Yojana, 3 cheers for that. My hats off to the Mantri. He launched it, as you know. Then when I went through the whole document, I had one big problem. Why did they launch this Yojana? It claims to ensure that, and I quote, at least one basic banking account for every household. Okay? Is opened as an enabler of inclusive growth. It's also added there as an enabler, but we seem to have forgotten that part, at least for the present. In the booklet published by the Department of Financial Services, which I agree, I think has put this act together, but 1 year ago, Vijay, I would have literally attacked you if you had said that. So, what do they say? The National Mission on Financial Inclusion The Prime Minister, if you read this document, the Prime Minister's message is brief and clear that the mission is to promote inclusive growth. That's what's my big. Sabke Saath, Sabka Vikas is central to our development philosophy. This is what he said. The reference to growth is a welcome addition. The PM statement to improve inclusive growth indicates that the government is considering opening a bank account as an enabler of growth. Therefore, the program has to grow further than the opening of a JDY or a so-called no-frills account. But, however, the answer to the why is to be clear. The steps to progress from opening an account to inclusion in growth have not been worked out. It will be good to remember, as I said, that at each step we might have require a different leader. For example, in the first phase, opening accounts, issuing RuPay cards, etc., government is in the driver's seat. There's no two ways about that. In the second phase, which could develop into a transition towards growth for many account holders, the banks would have to take the lead. Together with NABARD, People's Institutions, Technical Training Institutes, People's Institutions like SAGs, JLGs, PRI institutions. Can we all bring them together? That's my biggest problem today. With full support from centrally government-sponsored and state-sponsored anti-programs, not running parallel. Unless this is done, the JDY could well go the way of other previous government schemes, to my mind, which did not make a distinction between inclusive growth and inclusive spending. I think there's a slight difference between inclusive growth and inclusive spending. The other reasons why the PM is promoting financial inclusion are to empower the marginalized. What does that word empower mean? I'm not too certain. To reduce corruption and the transfer of benefits, all very, very, very excellent. Now, why are the banks involved in promoting RBI? Of course, they see our JDY, and you can correct me if the bank is sitting here, as a medium to long-term opportunity. But there are some bankers also who are seriously concerned. Let us expect that. They look forward to savings being deposited in these accounts, which they can access at low cost. There is also the potential for fee income from the sale of financial products. When direct cash benefit transfers are rolled out, it carries the promise of huge float funds, hopefully, unless something else comes in and says, you've got to park them somewhere. And if they are channeled through the same borrower's accounts, can act as margin money for loans or even as a guarantee. And these are things why the banks have. One concern raised by bankers was the cost, but that has now been sorted out. However, on the other side, when I speak to some bankers, they still express the concern that there will be a perpetual viability gap. Now, whether that's correct or not correct, I think it is concerned. In interventions to promote and sustain it, the former Deputy Governor of RBI, K.C. Chakravarti, God bless him, I don't know, he's happily retired now, in an interview at a television channel, I remember said years, some time ago, according to bankers, if customers are to be provided free ATM access, free checkbooks, regular statement of accounts, the break-even could be achieved only with an average balance of 30,000 rupees on account. Now, you may agree, you may not disagree. If you can't do that, then who's going to pay the cost? Market again, Vijay? It doesn't come from India. Now, how will these contrary sort of perceptions get removed? And the banks have a big job, I think, in doing this, and we will see how it pans out. Now, that's the why. How? RBI has adopted, how has the RBI done it? They have adopted a bank model, bank-led model. Hence, both the RBI consider them together. Because of the problems faced with opening brick and mortar, the RBI came out with the BCs and the BFs and all the rest of it in 2006. Now, however, banks have adopted different implementation models, and if you study the banks, it's a variety of things. RBI, SBI has about 60 to 70,000, I think is the only one I can see. Some banks recruited corporate BCs only, others individuals only, others both corporates and individuals. Now, where corporates were hired, then there's another model. Most of them appointed their own agents. So you have all these models circulating around, and when somebody comes and says BCs are failures, what the hell are you talking about? Now, a study promoted by CAFRAL, I think it came out to the Economic and Political Weekly of February 22nd. It was a very good study promoted by CAFRAL. The study concludes two things, that corporate BCs were expected to introduce professional management in this sector. Vijay, I'm referring to this BC because I'm a little more positive about payment banks than you are, little more skeptical about BCs than you are, unless they follow certain models. I mean, this is just to relate. The study concludes that corporate BCs have not introduced any professionalism. The study also concludes that individual business correspondents can be more effective. The study also points out as a caution that individual business correspondents are also functioning as agents of LIC, plantation, pyramid companies, and even of NBFCs, MFIs. It's a business. And hence there are areas of conflict of interest. Now, and this is the next statement. I'm taking this exactly from word for word from their study. I've summarized it, of course. The study further highlights the problems faced by BCs. And this, I think, we have to face squarely. We are not yet looking at it. Lack of regular connectivity and power. Delays related to technology failure and operational issues. Poor maintenance and handling of POS machines without adequate training to POS handlers. A bank imposed cap on deposits and withdrawals, which is much less than what the money is required by clients, especially in some states where money for education and all is transferred through these bank accounts. Poor remuneration. BCs expect 10,000, they are getting 3,000, 4,000. Demand by many banks that BC spends from its own resources to set up infrastructure like said by laptop, printer, biometric identification, etc. Incidentally, the SBI's website is a treasure trove of information on this. I just looked at the website, and there they have very well posted all the complaints from the BCs of SBI. I'm not certain if anybody in SBI has even analyzed it, but it will be very useful. It's a treasure trove of information. So, naturally, the ED of MFIN says BCs are failures. But I said, let me try it in napkins. Today, napkins is, our portfolio is about 800 crores in our fourth year. We are working with over 200 BCs. But they are not extensions of our program. They are existing institutions. They are federations of SCGs. They are mutuals to a large extent, who are also doing development. So we call them BD, Business and Development Correspondents, because we believe that they add the development angle to it. Now, what I find is, and we're making a study on why we are, how it's affecting our cost and our transaction costs and all that. What I'm saying is, if you can work with about 230 BCs and work on it successfully, there must be something good about BCs, provided you do not really sit on their heads and try to make them part of your system. It's not going to work. You have to leverage on what they are doing. You have to ensure that they are very involved with the people. You have to ensure that they are adding a development orientation and growth orientation and not just handling credit, which the financial institution will find it difficult to do. Now, RBI also set up this Nachiket Board's committee about payment banks. I have not gone to it, but it did, to my mind, set a clear basis for a distinction between institutions that are focused on direct transfers of one-way transfers of money and institutions that should focus on loans, which I think should be banks. And that I think we should exploit. The Jan Dhan Yojana, how are they going about it? Again, I think the Ministry of Finance adopts a bank-led approach, which is now led by the Ministry for the time being. There are, however, some concerns that I must mention, which will be addressed, I am sure, after the initial rush. These are the following. The urgency to meet deadlines and the promise of benefits like insurance or overdraft facility resulted in people rushing to banks to open a JDY-related account, although many already had an account. The announcement that these benefits would be available to existing account holders came very late. Came very, very late. By the time people had already gone. 2, the banks were supposed to conduct a survey of the village allotted to them to identify households without an account and bring them to the informal system. But this household survey started after the scheme. In fact, there was an old program where it was very well done. We have done it in Mairada for SBI, in fact, where we surveyed all the people and then only opened accounts. But here it is being done after the scheme was launched, which resulted in thousands applying to open accounts even if they had one before. 3, it is possible for the same person to open account different banks under the scheme. Presumably all will weed it out on the Aadhaar using it. As a result, the RBI governor cautioned the bankers not to just run after numbers but to focus on achieving the core objectives of the program. To me, it is still not clear who will manage the life insurance component. And finally, if the dilution of KYC norms, which you have done very well, I think today, even with I think my credit, my ordinary card, I can open a bank account. It is the dilution of KYC norms. If it results in misuse, who will be responsible? Many bank staff were concerned about this. Are you going to protect them? And where is the SAG bank linkage in all this scenario? I think the SAGs, the first mutuals that we supported are dead, almost buried, but thanks to very efforts to break them up into individuals. Secondly, thanks to the big rush by NBFCs to, especially between 2007, 8 and 10, to grow fast. As a result of which you had agents springing up who are now controlling 7 or 8 or 9 or 10 SCGs. And thanks to several other things which have really reduced SCGs from being an independent systematic institution to becoming a part of the delivery channel of something, including not allowing them to lend even at interest rates, which makes them ultimately so thoroughly dependent. They've become more dependent on the government, to my mind, than the original idea to make them independent. And the SCGs were never an end in itself, just like financial inclusion never an end in itself. They were originally conceived to be the first step towards leading people to banks. That was the concept. Ultimately, it is the banks that really have to deliver the goods. So many SAGs, they had group accounts, but then they had individual accounts. Thousands of individual accounts have been opened in banks. Unfortunately, the SAGs were abused. They were started overnight. There was no training given. NABARD was giving, even today they're giving 10,000 for training on SAG. SGSY gave 10,000. But what was it used for? It was used for big melas, etc. But the idea that you have to produce what we call institutional capacity building of SAGs has been totally lost, Thanks to speed, I have 3 words, most dangerous words: speed, greed, and standardization. Now that standardization, my problem is we want to standardize everything. In this country, when we come to natural, beauty outside, we look at biodiversity. When it comes to programs, we want to standardize everything for somebody working on top of the hill to somebody sitting in a valley. How can you standardize? One villager wants 10,000 for a cow because he can't afford to maintain a bigger cow. Other fellow wants 30,000 for a cow because he has some greenery. And you say it has to be only 20,000. Allow the self-help group, the institution at the last level, the mutual, to decide. You can't decide. How can a bank manager decide on this? And the bank manager has to get things standardized, otherwise he'll be accused of having, his biases. So the very system demands standardization, the people want diversity, and we are caught in between. And therefore we destroy the institutions of people by demanding standardization. Now these are the things. Now the states, how have they implemented FY? Now Madhya Pradesh, for example, has all the database of all the families, all the benefits that they receive from sources, and Madhya Pradesh has taken steps to remove hurdles. And this is important, to enable various schemes to support one another, not to exclude one another. These steps include bringing in other interveners like NGOs, MFIs, producer companies, and other people's institutions. As a result, we have so many producer companies in Madhya Pradesh today that napkin sitting in Bangalore. This year, our investment in Madhya Pradesh producer company is going to be over 50 crores. Now, it depends on, are you willing to work together with people? Rajasthan, Tamil Nadu, and also I think trying to. The erstwhile Andhra Pradesh had built up an impressive technology platform to transfer various government benefits to a technology company which operates like a BC. But as a result, in AP, there are 2 parallel financial initiatives. One driven by JDY, rolled out by the banks, other driven by the state government, rolled out to the technology company. Now, these are the parallels that we need to perhaps look at. Kerala has large gram panchayats, equally large budgets. Now, the GPs play a major role in bringing all these things together. For example, today, and with due respect to Chan Reyes, they are now looking at increasing the component of materials in the NREJ program and reducing the cost of, labor. To begin with, I've been in NREJ, I was in the first committee of NREJ, so I've been looking at it all over. Today, you cannot get labor in the whole of, at least I know up to, Karnataka, Andhra Pradesh, which is not under contract. You contract the contractor, he'll bring the labor. Because you are promising them 100 days, contractors promising them 365 days. And they don't mind getting less than your salary for your payment of NREJ, because the contractor takes a cut, provided they get 365 days of this thing. So the contractors are already there, my dear. And Kerala, what happens, and I back this fully, they say you have to put more materials to make any intervention sustainable. Now what does the Panchayat in Kerala do? NREJ says you can only spend 40%. What do? They take money from their other budgets and then make a good road, or make a good culvert. I mean, it has to be sustainable. So let us say that this country, you will never get rid of contractors. Like, it's very ironical to see this discussion on financial lending in the Catholic University. Because do you know, the Catholic Church was the biggest opponent of lending, because the Catholic Church considered lending intrinsically evil. Lending is not interest rates. Lending was intrinsically evil. Thank God for the Protestants and others who came. But the Catholic Church also is like Hinduism. No, they have ways of getting around it. The Islam is still stuck on their thing, so they've got around it. But it's interesting to see how the world moves on. Then this whole control. See, in the 90s we had liberalization. So what did you do? You liberalized, commerce and trade, you got rid of the control of capital issues, I remember. But what else did you realize? Agriculture was born free, it is still being strangled. And finally the poor. Leave the poor if you realize the amount of initiative, I've always said the poor are good, they must be good managers. If they were not good managers, they would have died long ago. And we want to tell them what to do, we want to sit on their heads. Leave them alone. Give them space, give them support. Don't standardize their whole this thing. So let us even get out of sitting on the heads of the poor. With due respect to the government here, maybe there are very few sectors left for government to dominate, and the poor is one. So please, for God's sake, get off their back. Liberate microfinance from the corporates, liberate the poor from the bureaucracy. Finally, who is the target? And here again, to mind, there's an inclusion. I'm not going into details. But for example, if you look at the Prime Minister's statement in the booklet on Jan Dhan Yojana, I'm oversaw. It very clearly mentions the word poor. It is inclusion for the poor. But if you read the rest of the document, there is no word poor at all. It is for all. It is interesting. Now it appears to be, the most interesting thing, I used to be in the World Bank when CCAP was just being formed in Washington, and then I left it, thank God. The CCAP had this beautiful thing, poorest of the poor. What are you talking about? Poorest of the poor. The NGOs talk about poor, so they are talk poorest poor. Then of course they are in trouble, and now they've come up with international financial inclusion, if you read the last thing, where the word poor is not mentioned at all. So it's gone from poorest of the poor to disappear the poor. Now these are the things that we really need to look at. And finally, my last comment, which I must comment on this, I'm very sorry, because to me there is an underlying culture which makes no distinction, and this is the second part, between loans and grants. And this probably is one of the biggest problems we have faced in this country today. And I'm saying this is because, again, I've written a long paper on trust. What Sri Ram said was correct. You want to lend, you have to lend on a basis of trust. Plus, the trust doesn't come out of an ATM. It comes out of a person-to-person relationship. And if you want to distribute money, for God's sake, distribute it. You know, as I mean, some have heard this story before, but I am now 75. I have to tell stories twice, 3 times. In the years gone past, there was one minister from my state who was famous for his abusing bankers, and also for the loan mela. So he came to my state, and one bank manager said, "Will you please come with me?" I said, "Why?" He said, "Oh, Batra, he is coming, and he will start shouting. At least you can shout at him. I can't shout at him." I said, "Take, I will come." So this bank manager assembled all the women, 10, 15. Those days, IRDP, OSG, SOHERO, and one with cows, one with goats, one with I don't know what not. So this famous minister asked in Kannada, "Did you ask one woman? Did you get a sala?" Now, sala is a bad word in North India, but in Kannada, sala means loan. The translation of sala means loan. She said, "I didn't get sala." And she got very angry with this minister. She almost beat him up. He said, "What is this?" Then he called the bank manager. Bank manager came to him and asked, "Did you get loan?" He used the English word loan. Loan I got, sir. Very happy. So he looked at me. I said, "Sir, this is the problem. Sala means she has to return. Loan means she need not return." This is the whole context of the issue. And to my mind, this has spread in every South Indian language, North Indian also, I'm certain. Kaikadan, Tamilians you will know. Kaikadan you have to return. Loan you don't have to return. Now, this culture has spread all through the country. And it has been unnecessarily exaggerated by interest-free loans. But now we have moved from subsidizing loan to interest-free loans. I mean, what the hell are we talking about? I have interviewed hundreds of people who you know, and not one of them mentioned interest as a problem. They mentioned we can't return the capital year after year after year. Even in cotton, if you look at cotton, the cost of interest in total input production is never more than 6% in Punjab. So why should I kill myself for interest? You know, so the whole issue is, I can't, and that moves to the next speech, we will talk about it, is how do you get these small people to aggregate? How do you get these small people to add value? How do you get these small people to market? And that is where I think we should invest in. So having said this, I'll stop. I think I've raised enough of issues. Don't complain about me to the Prime Minister. And secondly, and lastly, wish you all the best. It is an honor to be here. And my apologies for taking more time than I expected. Thank you.
Thanks all, and thanks all. Dr. Zain raised what all was referring to it in his last part of his speech was that the discourse has shifted from poorest of the poor to inclusive bank. I remember, even if you see the circulars on SHG bank linkage program in 94 and 95, it talks about poverty elevation. Somewhere down the line at around, 92. It is there. Poverty elevation words that I will show the circulars. And in 98, 99 it shifted to empowerment. Then it went to women empowerment. And from 2004 onwards, the juggernaut of financial inclusion is there. Now, the discourse globally, CGAP or NABARD or everywhere, the word is financial inclusion. But in the morning, we were talking about that it is a means. It is a means to an end, and the end has to be economic development, reaching the poorest of the poor, or whatever you call them, at the bottom of the pyramid. But my question to you is that we have discussed for you to address is inclusive finance or access to finance become a fad, ignoring the structural issues which will enable the persons to participate in economic development? And if, what are those barriers which will allow this means to really result in the end, based on your field experience? John Trust, please.
Thank you, Dr. Mishra. I'm going to give a very indirect answer to your question. Thank you very much. I think, as you rightly said, we are living through interesting times when, for reasons that would be quite interesting to discuss if there were time, Financial inclusion is suddenly felt to be a pressing need of the Indian economy and the Indian people, and many new institutions are being proposed, new technologies are being introduced, and new experiments are being made for this purpose. Unfortunately, I think among all those in this room, I am probably the least qualified to comment on financial inclusion because it's not really within my domain of competence. I was trying to educate myself yesterday on this by reading a few papers by Vijay Mahajan and others, but I got a little lost in the maze of acronyms. BC, CSC, CCB, CSP, DBT, BTFMS, FTO, KCC, KYC, ICT, MFI, NBFC, NPA, RRB, SHD, TSP, UID. If you know the full form of all these acronyms, I think you're a real expert on financial inclusion. But for my part, just to stick to my domain of competence, I will say a few words about my experience of the most basic step in financial inclusion in the context of the National Rural Employment Guarantee Act, known as NREGA in Jharkhand, and also of Social Security pensions, which is the basic step of helping people to have an account and finding an efficient method of making micropayments to them, whether it's wage payments in the case of NREGA or Social Security pensions of as little as 200 rupees to 600 rupees per month in the case of pensions. I think it's actually appropriate to bring NREGA into discussion because NREGA has been the driving force behind financial inclusion in the last few years. Now, of course, it's changing with Jan Dhan Yojana and so on. But I don't think it's sufficiently recognized that the big breakthrough came through NREGA. Now, bank payments were introduced in NREGA in the middle of 2008, mainly as a safeguard against corruption, as I think you would know. It's well known that in the early years of NREGA there was a lot of corruption, and the way it happened is pretty well understood. So basically what happened is that the contractors or the implementing agencies would, let us say, employ you for 10 days, but we put 20 days in the muster rolls, and then we pay you your 10 days so that you don't have an incentive to blow the whistle, and we pocket the difference. That's very well known, very old method which goes back to the 19th century of making money from public works programs. Now, one answer to that, or at least a partial answer, is to separate the implementing agencies from the payment agencies, so that the person who fills the muster roll is not the person who is also making the payment and doesn't get a chance to profit from fudging the muster rolls. And bank payments is one form of separation of payment agencies from implementing agencies. There are others also which I wish I had time to discuss, but anyway. And of course it means that the money goes directly to the laborers' accounts without any intermediaries. So it is actually a fairly effective safeguard against corruption. It is not foolproof. There are at least, in principle, 3 ways in which you can still siphon off money, even when the money goes to the accounts of the workers, which you can call respectively collusion, extortion, and deception. Collusion means that I tell you, okay, you work 10 days, I write 20 days in the muster rolls, then you collect your 20 days wages from the bank, and we share the difference, okay? Well, it's not easy to do because you have to collude with all the workers, but anyway, at least in principle, it's possible. Second is extortion. I write 20 days in the muster rolls, you work 10 days, then you go and collect your 20 days of wages in the bank, and I stand outside with a lathi, and when you get out, I say, wait a minute, you only work for 10 days, you give me the difference, or at least half of the difference. And the third one is deception, where you don't even go to the bank. I manage your bank account on your behalf. I open the account perhaps without even you knowing it, and then I collect the wages in the first place, and then I give you your wages in cash. I don't even tell you that you're supposed to be paid through bank accounts, and I pocket the difference. Now, so the question is, in practice, how prevalent are these practices? I mean, they're not that easy to do. I mean, it is a protection to pay the wages through bank accounts. The first experience we had of how it actually works on the ground happened in late 2008, so immediately after the introduction of bank payments, when we went to Devgarh in Jharkhand, and asked for copies of the Mercer rolls on a few work sites, and then we went back to talk to the workers. And within 1 hour of entering their village, we found that there was a huge scam going on. And this was not a team of detectives or bankers. These were undergraduate students who didn't know much about banking. Within 1 hour, we found there was a scam. I mention that because it tells you how little oversight there was at that time. Hopefully it has changed in the meantime. And what happened is that these workers were being paid by the Devgar Jamtara Central Cooperative Bank, which was basically a very poorly supervised and regulated local cooperative bank. And when we went to them and said, we asked them, okay, this is what has been written in the Mercer roll, have you been paid? Have you been paid through your bank account? They said, what bank account? They didn't know that they had bank accounts. So the contractors had opened bank accounts in this fly-by-night cooperative bank, and without telling the workers, they were happily siphoning off energy money through the bank accounts of the workers and just giving them their wages in cash. So we went to the office of the cooperative bank in Devgar to find out what was going on, and we talked to the managers, and it somehow didn't have the feel of a bank. For example, there were no customers, like an empty office with 2 or 3 people sitting around. And so we discovered that that office was actually an empty shell. It was just a front. And the real work was being done in the garage in a different part of Devgar, where all the contractors and bank employees and Panchayat Sevaks were happily sitting around manufacturing the records and siphoning off the money. That's what was going on at that time. Later on, of course, things did improve quite a lot. I think that now that cooperative bank would not even be allowed to make an energy wage payment. So there was an effort to rely more on the nationalized banks and the better supervised banks and also the post offices. And I think that these practices have disappeared to a large extent, although not completely. But the problem remains that the banking system is not equal to this task of millions or hundreds of millions of payments for NIG workers, or for that matter for social security pensions. For example, in the block of Manika in the Latehar district, we have been working quite regularly since, there is one branch of the SBI in the block office for the entire block, and that branch cannot handle this volume of payments for energy workers and social security pensions. And so many people continue to be paid through post offices. And the post office, at least in Jharkhand, is not a reliable payment agency, because the local postman, in a bank there are norms, and there's a certain amount of supervision and so on. In a well-supervised bank, it's really not easy to siphon off people money from somebody else's account. There's no identity fraud, there are norms. But a local post person is basically any odd villager sitting in a back room of his own house, or in a kitchen even for that matter, and disbursing payments. And it's very easy for a powerful local contractor to capture the post person and tell them that, look, don't bother with the laborers, you give me the money and I will pay them. So it is still possible. It's actually not very different from cash payments. It's cash payments through a post person who's actually not not an institution with any kind of safeguards. So at least in Jharkhand, we find that in the post offices, there is still a fair amount of corruption, and it's not very easy to deal with, also because the post office is an institution of the central government, and the employees are very difficult to hold accountable. Then in 2009 came the promise of the grand solution to all these problems, when UID was created, and we were given the dream of what I call micro ATM network interoperable and Aadhaar enabled, MANIA, MANIA. That's another acronym we can add to the list. So the idea is that there would be a nationwide network of local micro ATMs, internet-based and with foolproof identity authentication through biometrics and the internet. So it sounds really fantastic. When I heard about it the first time, on a blackboard in Delhi, it sounds like this is just great and unbeatable. But at least in Jharkhand, it is not appropriate technology, certainly not for the time being. Within a few weeks of the system being introduced, for NREG wage payments. The UAIDI was very interested in NAREGA right from the beginning, and I think the reason is, it's not so much that they wanted to help NAREGA, they wanted to get help from NAREGA to create a huge public demand for UID, because the story at that time was that UID was a voluntary facility. Now, of course, the mask is off, and we know that actually if you want to live, you want to marry, you want to get a driving license or a passport or almost anything, then you have to have a UID, but it's voluntary, of course. Anyway, at that time, they were somewhat serious about it being voluntary, so the question for the UIDI was, how do we persuade them to apply for UID when they're not going to get anything particularly obvious out of it? So this was one way to make the NREG payments through UID, so that the people would start flocking to the UID center to get to register. Within a few weeks of UID being introduced experimentally for the purpose of NREG wage payments in Ratu, in Jharkhand, outside Ranchi, we saw some extraordinary headlines in the national media. For example, this one from the Hindu on 10th of February 2012, thanks to Aadhaar, NAREGA is in demand in Jharkhand. And the article says, for example, as the new system ensures payment of wages within a week, the demand for work under NAREGA has gone up. Consequently, migration has been checked, families have been reunited, and no less important, some workers have a saving in the bank. Paradise, all thanks to NREG, to Aadhaar, and of course the impression is being conveyed that it's happening throughout Jharkhand. I mention this as one example of the kind of disinformation that often goes on about not just UID but many of these innovations, and that we have to be very wary of. So we thought, let's go and find out what's actually going on, and so we'll ask the UAIDI, where is this happening in Jharkhand? And we were told that it was happening in one block, Ratu, just outside Ranchi. It's the best connected block in Jharkhand. I mean, you cannot get closer to Ranchi. It's just, you can actually walk from the center of Ranchi to the place where this experiment was going on. And then we found out in Ratu that it was happening only in 3 Gram Panchayats. And then when we went there, we found that it was actually happening only in one work site of each of these Gram Panchayats, and they had barely paid 50 workers. So based on 50 workers being paid through this kind of showpiece, these national headlines came saying that Aadhaar was reviving NAREGA in Jharkhand. Even in those 50, the case of these 50 workers, or these 3 Gram Panchayats, by the time we went there in January, so within a month or 2 of the experiments being started, we found that the experiment had stopped because it was not working. The technology, we asked the BCs what was going on. They said machine kharab hai, kaam nahi karta, whatever excuse they had. It was often different excuses in different places. But anyway, the point is the experiment was over. That, of course, was not reported anywhere in the media. So it was not, the purpose of an experiment should be to learn. When we start an experiment, we should monitor it, and we should try to find out, is it succeeding or is it failing? How can it be improved? That's the purpose of an experiment. This was not an experiment. It was a kind of showpiece projected as a success immediately for the purpose of being able to go ahead as soon as possible with the next step. Now, that's not to say that BCs are all bound to fail. There are many other, BC doesn't mean UID. UID is one form of BC. There are many others that have been mentioned actually by Mr. Fernandez. I agree with that. In Jharkhand itself, there was a different experiment that was done in Litki with local biometrics. There's the network of Pragya Kendras, which are little BCs that are supposed to be posted in every Gram Panchayat. There are various tie-ups with private companies and so on. But to my knowledge, until this day in Jharkhand, we have not been able to find a really working, viable and sustainable BC model. I'm aware that there are other states where it has happened, perhaps in Andhra Pradesh or other states. I'm not saying that BCs are doomed to fail. I'm saying that as of now in Jharkhand, the BC system is really not functioning, and that is creating a very big problem for NAREGA as well as for social security pensions. How much more? I don't know to exceed 5 minutes? Okay. Very briefly before I end, meanwhile, another innovation has been introduced for NAREGA payments called EFMS, electronic financial management system. So the idea is that everything now is going to be automated and internet-based, so that when the Rozgar Sevak, the frontline NREG worker in the Gram Panchayat, enters the muster rolls on the internet, after that there will be an automatic generation of payment advice, called FTO, Fund Transfer Order, and then it will just take a click of the mouse from the BDO to authorize that payment advice, and then it will go automatically to the bank and from there to the accounts of the workers, and the whole thing will be transparent and visible on the internet so that you'll be able to trace exactly how far your payment is reached and so on and so forth. Again, something that sounds pretty good, and if it works, of course, it's something that one would welcome. But unfortunately, again, somewhat out of gear with the technological and infrastructural preparedness in Jharkhand. For example, again, in Latehar district, in Mahoadar block up in the hills, there is still no connectivity, so the BDO, to sign a muster roll, to click on that mouse, has to travel from Mahoadar to Latehar headquarters through Gumla and Lohardaga, because it's a kind of isolated block, so they have to travel 200 kilometers through two other districts to come to Latehar headquarters to click that mouse. In Barwadi, where there is connectivity, it takes 1 hour to click 8 times. So because each time you have to get to the point in the system where you can click, and that you can do only, at least when last time I was talking to the BDO, he was saying within an hour I cannot authorize more than 8 payments. And in Manika block, payments were held up for 3 full months because there was no BDO appointed, so there was nobody to click that mouse. In the earlier system, you could do the payments at the Gram Panchayat level. You just had to get the Sarpanch and the Gram Panchayat Seva to sign a check, and you could make the payments. But now, this new system, which is supposed to make things easier because everything is going to go straight from the district to the worker, is actually making you more dependent on the BDO, and if there's no BDO, there's no payment. There's another aspect of this system, I don't have much time, but very quickly, which is actually a form of financial exclusion and not inclusion, which is that to do this, you have to freeze the bank accounts. Not the bank accounts or the post office accounts. So the idea is that you verify before you automate the system, as a safeguard, you verify every worker's identity and details and all that, and then when you verify all these details, you freeze the account. It's not totally irreversible, but it's very difficult to reverse. Once it's done, it's like as good as irreversible, at least from the point of view of the worker. 2 big problems. One is that the automated payment is based on the drop-down menu in the MIS. So when you want to make a payment to Dr. Alok Mishra, I look for his name in the MIS, and then the FTO, the financial transfer order, will be based on his name as spelled in the job card, which is the basis of the MIS. But when it goes to the bank, Alok Mishra may be spent MIS-RA instead of MIS-HRA in the job card. So the spelling in the bank account may not match the spelling in the job card, and even if in one letter does not match, the payment is stuck. And meanwhile, your account has been frozen. So you can imagine the kinds of difficulties that people face on the ground. Worse than this, there has been mass freezing of accounts, of post office accounts, when actually what we should be doing now is try to move people from the post offices to the banks, whether through BC or some other system, maybe building up the infrastructure of the banks or whatever. We should try to get people off the post offices, or we should improve the post offices and put better technology and better safeguards in the post offices. But until that is done, the post office is not a reliable payment agency. So we should try to move people from the post offices to the banks. But once you have frozen their accounts in terms of the post office, that's very difficult to do. So it's a kind of form of financial exclusion. Let me end here, but let me just end on 3 general remarks going beyond NIGA and social security pensions. Well, firstly, let me mention that what I was trying to say is that despite all these years of experimentation, and I have to say a lot of progress in many ways. I mean, the payment system today, nevertheless, are very much better in many respects than they used to be. So I'm not dismissing what has been done. But nevertheless, I think it's important to note that at least in Jharkhand, to this day, we don't have an effective system of payments for NREGA workers. or even for social security pensions. So 3 lessons from this, I think. One is beware of transition costs. We talk a lot about transaction costs, and rightly so. There are big transaction costs, and we have to minimize them. But the transition cost can be very big too, because when you introduce a new system or a new technology, there are always so-called teething problems. But the teething problems can take a long time, they can take years, and they can cause immense hardship for millions of people. Narega was almost killed by the transition to bank payments, not because the bank payments was a bad idea, but because it was done too fast and without sufficient attention to the bottlenecks that were going to come. So we have to be very careful with the transition costs. Secondly, we have to beware of inappropriate technology, and here I have a slight difference with Mr. Vijay Mahajan, despite having learned so much both from your presentation and from the paper that I read yesterday, where you talk about, you make a pitch for high tech and high touch. I don't think we should go always for high tech. I think we should go for appropriate technology, which sometimes means high tech and sometimes may not be. Just to give an example, the most effective payment system for social security pensions today in India is the Orissa system, where payments are made in cash every 15th of the month at the Gram Panchayat. It's the only state I know where the pensions are paid regularly every month on time. In all the other states, there are delays and all kinds of problems. Now, that doesn't mean that this is the best system forever. Maybe one day, obviously, in principle, if you have a bank system, you could automate the payment as well. But the fact is that in today's circumstances, that system, which is technologically the simplest and the least sophisticated, is the one that works best. So appropriate technology doesn't necessarily mean high technology. And I'm sorry, Vijay, but I really don't think that India will be the first country in the world to dispense with currency. I can see that you're a dreamer, and I'm very appreciative of this quality. But I think that we have to realize that it really will take time to put infrastructure and technology in place, and I would be very happy if currency disappears one day. But I don't think it will be in India that it will happen for the first time. And lastly, I think we have to beware of disinformation of the kind that I've illustrated with the story about Ratu, but I could give you many others. For example, there's a Kot Kasim experiment in Rajasthan, which was again projected immediately as a grand success in the national media, and then when people actually went there and found out what was happening, we discovered that it was a big flop, and I can give you other examples as well. So we have to be very careful. None of this is to disparage any of the valuable innovations that are being explored today in the field of financial inclusion, but it is an invitation to be cautious and to always keep in mind that the ultimate purpose of financial inclusion is to improve people's lives. Thank you.
Thanks, John Reyes, for a very inspiring and insightful story about the Narega payments and the pitfalls we must avoid. Seeing at the clock, I thought that we would give the maximum time to Q&A, but the organizer says that my time, the panel's time is almost up. But still, I would not give up on the Q&A, and at least I think we can have time for 3 questions, 3 quick questions.
3 minutes or 3 questions.
Okay, that will depend upon the ability of the questioner to keep it brief. Please introduce yourself and the panel member to whom you are asking the question.
This is Professor Syed Hassan from Concordia University, Montreal, and also Delhi. For Professor Mahajan, Dr. Mahajan, you talk about financing infrastructure. Now, it's been a word for agriculture, but for infrastructure, what do you think that some form of securitization might work? Like the new facility will give larger incomes to all the participants, the transportation workers, grain, whatever it is. So you can always collect a portion of it from either from levy through a license or whatever. In Montreal, we still pay for the Quebec, the Olympics, the 6-7 Olympic stadium. We're still paying for it. I think even a few years ago, there was some part of the local tax bill has a surcharge for the airport. Anyway, so that can be securitized and sold off to private investors. I know the pension funds in many countries invest in such things. And now that the money market rates are so low, negligible in most of the industrial world, that it'd be not easy to have that kind of access to such funds. Thank you.
Yeah, that's a financial sector innovation, which is easily possible. But where the problem is the assurance that in the first place payments will happen. You know, just take the most famous toll gate in India, which is the Gurgaon toll gate. So the concessionaire collected an enormous amount because his projections were very conservative, and actually the traffic was around 7-8 times what he projected. But then, instead of correcting that situation in a systematic way, the concessionaire was completely removed. So if I am a concessionaire in the future, I say, hey, I'm not investing in this.
So the government can be the guarantor, because it's a licensing authority that will give a fraction of the cake to this consortium that's building it.
Yeah, so basically you need different, institutional innovations where there's got to be, basically what I'm saying is the investors looking for a risk-adjusted return, and unless risk is managed through institutional innovation, money will not flow to agriculture, which is the most primary livelihood, and then, to the informal sector. Simple thing like, say, vocational training. Just 1 second I'll take. If we had the equivalent of what is there for every vehicle in India, an RC book, a registration certificate book. If for vocational training we had that, where my degree or diploma, vocational training diploma is stamped at the back if I've taken a loan, and there's a law saying that there will be a reduction of from the salary till the time as the loan is due, and it will be paid directly to the lender. We will have $100 billion flow to vocational training the next day. But in the absence of that, you can keep subsidizing vocational training till house comes.
Sorry, I think this has to be the last question. Sorry.
Yeah, my name is Shanti Kumari. I am Chief Operating Officer in NRLM. My question is to Mr. Fernandez on the BC model. So I am wondering if you could reflect on what are the opportunities that this model missed in the process of evolution, and what are the desirable changes that should happen in the next 10 years so that it becomes an effective answer to the outreach problem.
Thank you. It's a big, long answer, but in short, I think the BC model as it has been run out today, where the banks are, either the banks are putting their own infrastructure in place or hiring BCs and asking them to really put infrastructure in place, is not going to really work. Rajasthan, some states, what they have done is they've given the BC 100 feet by 100 feet in all their local government institutions. So the infrastructure to some extent is sorted out. They've given them computers and this and that. So the government has come in some states to provide the BC with this basic infrastructure thing, and also to channel a lot of other services through the BC. Now, therefore, we have to work together. This is my crux of my point. Policy I have no problem with. The issue is getting people to work together at the state level. And in fact, I'm very critical, with due respect, on the mission mode today. The mission mode has, the last 5 or 6 years, been the feature of most central government schemes. It's running parallel through the whole system. And really it has its own culture, and maybe it is done for the best of intentions, we keep good accounts, but it's running completely parallel. Now the point is that if this happens throughout, we are going to really have a problem. At the state level, and to my mind at the panchayat level, there has to be far more integration, which has to be left to the panchayat or to the state to decide. And unless this is going to happen, we will fight to the best policy and the best intention. For example, I know NREGA was, to my mind, one of the best run programs from the center. It might have problems, I'm not denying that. But the meetings I used to attend in the first 3 to 4 years, they had data, there was hard work going on, fantastic. But at the ground level, and another issue is, remember, we talk about having institutions involved. What about market forces? And the market forces play a big role in this centralized standardized program. Because the market, in Nerega, markets were paying in Karnataka state, the mines were paying 3 times Nerega salary. So in spite of all your problems, what happened was, all the young people were in the mines, old people were doing Nerega work, and they were getting, and they couldn't do any work, so they would go to the bank, draw the money, and at the gate was the contractor. Out of 80 rupees one day, they used to pay 50 rupees to the contractor. He used to come at night and complete the road. You get a better road, in fact, made than if you just throw metal. So the problem is market forces are very much in operation today, and we have to take, so BCs also are in the market. BCs also have to survive. And we have too many restrictions on them, really. Don't be, to my mind, I have a hope that BCs can survive. Provided we are clear that they have needed remuneration, provided we are clear that at the state level we are integrating the BC's operations with a number of activities which the state are doing. If you don't do that, and if you work independently, I don't think it's going to work.
Thanks, and my apologies to all those who wanted to ask questions. I think we have exceeded the 3-minute limit also.
Hello, 30 seconds.
Sure.
During the period that we had the session, 7,40,000 transactions have happened on the electronic transaction system of the country. Anybody can go to etal.gov.in and you get a minute-by-minute count. So it's happening in real time. And of course you can go and count how many of them are there. I think we'll have. Yeah.
Thanks.
etal.gov.in.
So, a deep sense of thanks to my esteemed panelists, and before I bring the session to a close, I think the claps have already started, so I need to thank you very much for being here.
Thank you, Dr. Mishra. Now I would request Professor Pradhan to hand over our token of appreciation, simple mementos.
What is it?
Thank you, Dr. Pradhan. Now we will break for the track sessions. There will be 2 sessions. Those who are going to be, those who are attending track 1, please stay back in this room.